on Connect with Amnish Aggarwal, who's joining in from Prabhudas Leeladhar. Morning, Amnish, and wanted to start off by getting your take first up on Reliance Industries. All eyes on the AGM that takes place later this afternoon. While, of course, we'll be watching out for some of the key aspects in terms of retail, the telecom IPO, what happens with the consumer brands business. Is there anything else in specific that you think the street will closely be eyeing?
Good morning. Two things here. First being that as far as your geo or retail business is concerned, the expectations are already built in that over a period of time, these companies will be separated and their IPOs will come. Now, I think what markets will be keenly watching out for in this year's AGM is more on the, you can say, announcements regarding their green energy initiatives and new energy. Because these are some of the initiatives where they have been talking about, you can say, spending a lot of money, a lot of big corporates are going into it. And whether it is solar, whether it is green hydrogen and all, I think these are some of the key things people will be watching out for in this year's AGM.
The other thing, of course, is, Amnish, the market has been anticipating and now sort of given up hopes as well on whether or not there is going to be value unlocking of the subsidiaries. Retail is the one which has been talked about after Jio Financials listing, that are they looking to hive off that business and list it separately or not? Do you think there could be any such announcement coming in?
It is very difficult to say, but in my view, in addition to retail, one business which is actually very ripe now for listing seems to be your telecom business. Because we have seen the tariff hikes, first of all, in prepaid and recently in your postpaid plans. And this is one business where if you look at across vertical, whether it is Airtel, whether it is Vodafone, I think the numbers are... Retail is something I would say it's work in progress. They are growing, but still highly competitive business. Lot of, I think, things to do by Reliance in that particular business. So I won't be surprised if your telecom business, which is a GA platform, comes first and retail later.
What's the outlook when it comes to some of those power financiers? You know, the likes of PFC or an REC, they have been in the spotlight of late. There's recent reports as well that have come out. How are you looking at the kind of movement that we've witnessed here?
You see, all these power financiers, they have been in limelight because of two reasons. First of all, their NPAs have always been very low, but now with the move which is happening towards renewables, that is giving them, I would say, a fresh order book, which is clean. Their overall disbursements as well as your allocations are also rising, and that is why we have seen over the last 1.5 years all the power financiers, PFC, REC, and the last entrant year, ADA. So all of them have done very well. But having said that, now they are not trading at a significant discount to price to book where they were trading a year and a half back, because all of them were a sub 0.4, 0.5 time price to book. But that doesn't seem to be the case now. Now, I think it will be a slow and steady climb from here, and seems more like, you can say, the cream of the returns, at least in the near term, they are over. Now it will be very, very measured returns which will come only over a period of time.
Right. Amnish, stay with us. Lots more to talk about, but let's just address what's happening with Paytm, because they have received the FDI approval for downstream investment in the wholly owned subsidiary, that's Paytm Payment Services. With the approval now, Paytm is going to resubmit an application to regain a license for its payment services business. Varun, in fact, is here to tell us more about exactly what's been happening at Paytm. Varun?
They have received FDI approval for downstream investment in Paytm Service Limited. And if you remember, this is something that has been going on since November 2022, when RBI initially rejected the approval for this downstream investment, citing some of the issues. At that time, RBI gave them around 120 days extension to again file for this approval, but they were not able to get the approval. And following this, AntFin has to actually sell around 14% of the investment. At that time in August 23 they did it, and around 10.3% of the investment was sold to Vijay Shekhar Sharma's wholly owned firm And after that, if you think, there were rumors in the everywhere that they would get this FDI approval, and finally they have got this FDI approval. Till they for now, if you look at, they have to go ahead and apply to RBI for getting a payment aggregators license, which basically, if you look, brokerage houses are citing that they would do this going forward in some days. Till that time they get the approval, they would continue to provide online payment aggregation services to existing partners. Now what brokerage houses are saying, that till the time they apply for RBI approval, there would be no changes in the valuations of the company, because the final approval from the RBI would have to come, because other than RBI you also have the NPCI approval, which would be awaiting after they getting this approval. But the FDI approval that they have got is actually sentimentally very positive for the company, and going ahead everyone would look ahead for the RBI approval, which many of them think is they are about to get this approval in some time.
All right, thanks very much for giving us that heads up. In the meantime, Amnish, wanted to get in your take then, in particular as to what your outlook is on stocks that are fairly closely linked with crude oil prices, given the fact that it's been the second straight day of losses. We've seen it below that $75 per barrel mark. What would be your outlook on some of the paint companies, the OMCs, etc., that are closely linked to crude?
If you look at crude in the past few months, it has been pretty range bound, and there is no big spike which is visible and expected in the crude prices. So if you look at, say, in particular paint companies last quarter reported a pressure on their gross margin, because it is not only the function of crudes, but there are a lot of other additives and raw materials which go into it, and they were actually facing you can say, inflationary pressure, for which from 1st of July, they also undertook some price increase. Now, I think as far as paint companies are concerned, the crude softening or the raw material softening is positive for them. But at the same time, the bigger concern in the industry has been more on the competitive side, where I think the entire story will play out in the coming few months, particularly in the festival season. So while on the raw material front, if the pressure eases out, I think it will start getting reflected more in the numbers beyond 2Q, because for 2Q, the raw materials would have been procured by now. So as of now, we don't have any great view on paints. We are more like a cautious view on all the paint stocks, given the spike in the competitive intensity, which is yet to play out fully. Now, as far as you can say other segments are concerned, I think they will be positively impacted because of the, you can say, benign crude prices. But definitely crude, I think, if we look at, say, medium term, it has been range bound. If it goes down, say, to 70 or below 70, then it would be a game changer. The range bound crude is positive, but it is not going to have any meaningful impact on numbers, at least in the near to medium term. And so that is why there will not be any significant change in the long-term view on these stocks. But due to these variations, there could be, you can say, some uptake, some trading bets which can come in the various sectors.
Amnish, the other thing I wanted to talk about is what's really happening with IT. While, of course, the Nifty IT index is sitting at an all-time high, but the communication from the managements now seems to be turning quite positive. We heard from LTI Mindtree, now HCL Technologies on their investor days saying that they expect double-digit growth in the medium term. Demand is turning optimistic, and they're quite hopeful of BFSI actually turning around.
If you look at the commentary which many of the IT companies gave in 2Q, so I think the things are actually turning around finally. And because people are also expecting interest rates to be cut by Fed in maybe, say, in September or October at max. Plus, post-US elections, people are expecting the uncertainty to go down. So that is why now the commentary from IT companies, whether it is BFSI, whether it is retail, ER&D, so some of these segments are definitely turning for positive. And many of these companies, particularly the mid-cap ones, can see actually the growth rates now going in double digits. There is, I think, improving visibility, so which has resulted in actually the stock prices, you can say, reacting to the news now. And maybe I think at the time of results itself, a lot of stocks reacted positively to this.
All right, stay on with us. Lots more to chat about. And the block deal action clearly has gained pace. Sources are telling ET now that block deals are likely in Interglobe Aviation and PB Fintech. Meanwhile, ET has reported that Wellspun Living promoters are also looking to sell stake. Let's get in all the details. We've got Somit here to fill us in. Morning, Somit.
Well, block deals worth nearly 13,000 crore rupees are expected to happen today in the market. The smallest one is coming from Wellspan Living, where the promoters are looking to offload close to 4.6% stake. The deal is valued at close to 900 crore rupees, and the offer price is nearly at a 5% discount to the current market price. The second one is from PB Fintech, where Tencent is looking to sell around 2.1% stake. Deal value is close to 1,600 crore rupees, and the floor price is at a discount of nearly 4.5% compared to the current market price. And the largest one is coming in from Indigo, where actually the selling party, which is Gangwal Group, has upsized the deal from around 6,750, which was the earlier offer, to close to 10,300 crore rupees. Now he's selling close to 5.8% stake, and even after selling this stake, he will be left with close to 13.6% stake. And there's a limit also when he can sell this stake going forward, and there's a block of around 150 days. Post that only he can go ahead and sell this remaining 13.6% stake in the company. Again, this deal is also happening at a discount of nearly 4.5 to 5% compared to the current market price. The block deal size has been up from 6,750 to close to 10,300 crore rupees, where the promoter is selling 5.8% stake now.
All right, thanks for that. We'll be watching out for all that block deal action on D Street. But meantime, commodities have seen volatile moves over the past few months. The political uncertainties continue with demand concerns. But are they gearing up for a fresh upcycle? That continues to remain the lingering question. So let's take it across then to some special analysis. Kunal Bothra joining from the wall to take us through the charts that we'll be going through with Nikunj. Nikunj?
So interestingly, what we are looking at, we were talking about it in the morning, the importance of the dollar index. Now, historically, which is what markets are when you look at these trends, if history and the movement in the dollar index is anything to go by, dollar goes down, commodities, they go higher. Interest rate goes down, commodities, they go higher. While the slowdown, Kunal, in the world is because of demand coming down. That's when you can interest rates. But when the dollar index goes down, it also unleashes a different kind of an chart pattern, which is that commodities, then they start not trending, they start roaring. So our commodities now, we're not talking about commodity stocks, our commodities now getting ready for that next leap forward.
I strongly believe so. So I think you mentioned it rightly that there was a phase in 2020, 21 so far that when commodities started to, dollar index started to get into a correction, commodities did not have that impact. But this time around, it's a very synchronized kind of a price charts which you're seeing across the globe for many of the commodity charts. Now this is, for example, just I've taken the example for gold prices over here, where you can see that the gold prices over the longer term basis looks to be getting into a trending mode. And how when the indicator gets into a breakout, you see a major super cycle which lasts for not just 1, 2, 3 years, but at times even for decades for asset classes. Now there are three commodity asset classes where you're seeing such kind of a breakout. The first one, which you can see, is on the zinc chart, where you're seeing the the indicator starting to get into a reversal. 2012 it happened. It almost led into a 4-year, 6-year upcycle. 2016, 2020, and now 2024. You're seeing the third or the fourth straight indicator of a breakout. Then followed by another commodity cycle, which is aluminium. Again, a very similar kind of a chart, and all of this is coming together. That all of these charts are showing a synchronized breakout. Aluminum, again, a very similar kind of a tendency where you're using the indicator breakout. And these are strong technical back-tested proprietary indicators which have developed, which gives you a sense of what could happen to the index over not just the span of 2-3 months.
What could be the upside in 3 months, 6 months and 1 year?
These indices or these asset classes should break past about their lifetime highs.
How far are they away from their lifetime
high?
We
are almost 50% to, in some asset classes, 80% below their lifetime highs.
Okay, so are you making a case that aluminum, zinc, tin, copper, industrial metals are getting ready for a 30 to 50% jump? It will not be a rally, it will be a rise.
It will be a rise and it will be a multi-year uptrend.
Okay. Is it a good time then to buy commodity stocks, or should buy commodities only? I mean, for somebody who's looking at price action, is one better off buying commodity stocks or commodities in the commodities market?
See, I think eventually it will always trickle down to the commodity stocks as well, like what happened to the gold prices when it moved up higher, it trickled to the gold stocks in our markets or as well as across the globe. I think it's going to trickle to commodities as a stocks basket as well. But what I'm indicating here, Nikunj, is that this is not just a very short-term phenomena where you see jump of 5%, 10% swing. No, this is a big cycle in the making which would last for years to come by.
Which is the strongest industrial commodity according to you?
So copper is of course considered to be the strongest industrial commodity, but then all the asset classes like aluminum, zinc, lead, all of them are showing a synchronized breakout.
So industrial metals are getting ready for a jump. Within that, it is your judgment call. When I say your judgment call, a viewer's judgment call, whether they should buy, whether they want to buy commodity stocks or individual commodities. But within that, copper, which almost went into a bear market couple of days ago, now is getting ready to make a new bull market high. So from a bear market to bull market high, that's what financial markets are now. They change very fast, and copper is getting ready to make a new high.
All right, there you have it. That's the view coming in on commodities and the kind of linkage and movement as well that we've seen. Meantime, Amnish, curious to get in your take as well on what the outlook has been on the likes of an Interglobe Aviation. We're talking about a block deal that's likely worth about 10,300 crores. Recently as well, there has been quite a bit of news over here. We have seen domestic traffic as well picking up when it comes to air travel. What's your outlook?
You see, we are quite positive on, first of all, the domestic aviation and Interglobe Aviation in particular, because it is having a very strong market share. The traffic is picking up, and so will be the growth in profitability as we go along. I think Indian aviation is likely to do well, and the company has strong balance sheet. I think some 12 to 15,000 crores of cash is there, and it is also expanding quite fast. So we are positive on Interglobe Aviation from a medium to long-term viewpoint, and it is in our list of topics as of now.
Okay, that's the take coming in on Rakesh Gangwal actually sizably coming down with his stake in Interglobe Aviation, selling via block deals in the open market. Other than that, just want to talk about Vodafone as well. The Supreme Court is going to be hearing the AGR case, so look out for what that stock does. And then, of course, Paytm, they've got the government nod, like we just highlighted, for investment in payments arm as well. Amnish, I don't know how you're reading the developments into Paytm. Of course, the stock has recovered quite a fair bit from its year lows. But all the news, do you think the recovery is justified here? And should investors be looking at it now?
We are not that closely tracking Paytm, but definitely the worst seems to be over. The company has got cash by selling one of the verticals to Zomato. Then now if they apply for the fresh license and they then carry on with the things in a more regulatory manner, then definitely I think one can definitely say that the worst is over. Regarding detailed financials and all, we don't have a coverage on this name.
Okay, fair enough. Meantime, Naresh, let's get in some chart checks going then as well. And within the broader universe, just checking in on some of the stocks that were under pressure yesterday. What's the view on Tata Elxsi as well as Hindustan Zinc and Z Entertainment?
So Tata Elxsi had a quick move from 7,000 to 9,000, and that too on very large volumes. And it has drifted lower. So 9,000, 9,100 mark was the previous top roughly back in the start of the year. So expecting it to consolidate, maybe come down towards the 7,800 to 8,000 mark. That is where one could look at a bounce back trade. But for now, it doesn't look interesting. Hindustan Zinc, again, the stock has had a huge rally. Then we've seen OFS and then continues to consolidate. So the gap down has continued. Out here, at least it may be forming a base for the next move. Does not look as much negative. But Tata Elxsi would be closer to 7,800, could be an entry point.
Kunal, how charged could the move continue to be for IT? I mean, today, of course, HCL Technologies on the sidelines of the investor day have actually indicated that it's going to be a double-digit growth. They're looking at a big bump up in BFSI or demand revival, I should say. So that's going to be one stock which is going to be in focus for sure. Other than that, of course, the big move that you had in LTIM yesterday, you think these moves are sustainable?
They are sustainable, Aisha, because when you look at the YTD performance, for example, Infosys is one of the best performers on a YTD basis. I think it's up some 24-25% the last I'd seen. Compare that with the likes of TCS, which is 18%, HCL Tech, which is around 16%, and the mid-cap IT basket is into negative territories or very flattish kind of a YTD performance. So when you look at this, not just as an individual move over the last 2-3 months, but then what's happened or transpired on a last 8-9 month basis, then we expect that this could be a very strong trend in the making. Now, the first leg of an uptrend, which generally happens in a sector rotation or a strong sector up move, is led by large cap names. That part is, I think, has been done pretty well by the large cap heavy weighted names like TCS, Infosys, HCL, etc. Now, the mid cap end of the market or the IT index, I think that's where you might probably start to see outperformance. So, what we saw yesterday or over the last couple of days, the likes of L&T, Infotech, Mindtree, Technology Services, Coforge, etc., showing signs of a recovery as well as a potential start of a uptrend, could be pretty much on the higher side.
You know what's interesting, Naresh, is that beginning of the year, the consensus view was that IT will do nothing and banks will do all kind of heavy lifting. And if one really looks at the bank Nifty and the IT index per se, IT index is up 20%. The bank Nifty, I'm sure, without even looking at the screen, I can tell you it's nowhere close to 20%. And the Nifty, in a sense, has managed to really get a lot of its support from the IT index or from IT stocks rather than banks. That's the bank Nifty for you, up 6%. Naresh, if I may use that Hindi terminology, ये तो उल्टा पुल्टा हो गया. Banks were supposed to go up, IT was supposed to go down.
So, if you look at it, the market has been anti-consensus moves all through the last 3-4 years. If you look at it, 2021, we were only talking about IT, pharma, diagnostics, digital, and they were going to be the leaders. Next 2 years, they did nothing. 2022, we had a great move in Bank Nifty. Then by end of it, we thought banks would continue to lead, and then we falter on banks. Same way, we've seen max number of, NFOs coming on defense funds, and we've corrected 20% over there in the last couple of months. So it's become a contrarian's play if one has to look at it. So right now, just the point where over the next couple of months, there could be a time where banks could take leadership because everyone would have given up on it, given the extent of underperformance for the last few years. So the trade right now is to play anti-consensus because that is because flows are there. So moment there is a little change, the markets will catch on to it. So IT, we saw a little change happen over the last few months and the index is at an all-time high. So the trade right now is to be a little contrarian and then wait for the a little change and then latch on to it.
Stay on with us. Meantime, it's day 2 of the Global FinTech Fest. We've got some of the biggest names converging to discuss ideas, and we've caught up with several voices. But let's find out what's in store for day 2. We've got Ankur Mishra joining in. Ankur.
Yes, it's day 2 of Global FinTech Fest, and there are a host of names which will be watched out for. That will be SEBI chairperson Madhvi Puri Buch, after recent news you would have seen which was flowing of various kinds. Now, to this first time she will be speaking on one of the public platform. Apart from that, Ashwini Vaishnav, we have RBI Deputy Governor T. Ravi Shankar, we have Subhendu Pati, we have also RBIH CEO Rajesh Bansal, who will be speaking at Global FinTech Fest. But more importantly, the tone was set by Reserve Bank of India Governor Shaktikanta Das, who mentioned that more than 11,000 fintechs have been registered in India, and there is a host of investment which is coming. But one thing which caught my attention was a statement which was given by Nandan Nilekani, who spoke about Finternet. Now, you would have heard about finance, you would have heard about internet. Now, something which India is working is a mix of that. Now, there will be tokenization of not only your paintings, your assets, but any kind of stuff that will be recorded in the financial system. So it will be a mix of finance as well as internet, and the Finternet is something which India is working on.
Just say that, what is Finternet? I missed that last part. Sounds very exciting. After internet, it was Finternet. Just what does that mean essentially? Ankur?
So essentially it means that there will be records of all the assets in the financial system. What happens currently, a bank may have some information, any of the other NBFC may have some other information, but in form of tokens, all the information will be kept, whereby the financial entities can be exchanging these tokens. And so, for instance, somebody is applying for a loan, that will be easy. Somebody is applying for any other financial products, so there will be communication between financial entities, and therefore the word which is coined by Nandan Nilekani was Finternet.
Thanks very much, Ankur, for giving us that heads up. Lots to watch out for. And of course, on the final day, we will have none other than the Prime Minister Narendra Modi addressing attendees, but lots of interesting panels. And we will be there as well at the event later this afternoon for those discussions. But meantime, Kunal, let's get in some chart checks going. And we were talking earlier about the likes of a PFC and REC and the movement there, the latest brokerage notes. Do you believe that there is some sort of a long-term rally in store for these names?
I strongly believe so. I think what we've seen over the last 2-3 years for many of these power financiers, I think is not just a mere short to medium term uptrend, but this is a very strong uptrending cycle which is going on for the last 2-3 years. And even in this recent phase where I think REC, for example, I think from 670 or 680 levels had corrected back towards sub 600 mark. What you've seen is more of a time-wise consolidation rather than a major price correction. Because remember that these stocks were erstwhile very high beta. There used to be swings of 30%, 40%, even 50% swings into these stocks after a very strong uptrend. But that's now behind into these cycle trends. And what we are seeing right now is that these stocks are going through more of a time-wise pause, correction, mean reversion or cooling off of indicators from an overbought territory. And that generally is an indication that the cycle or the uptrend is still intact into these stocks on the longer term basis. So I believe that the correction which has happened for the likes of PFC, REC, when these stocks corrected by 15% or so approximately from their recent swing highs, I think it's a very good opportunity to try and chip in or accumulate further from a long-term basis.
Okay. Meantime, Amnish, before we let you go, a quick take coming in from you as to what the outlook is on some of the recent listings that we've seen. Has there been anything that has caught your eye?
Still, if you look at, say, Ola Electric or your First Cry, I think particularly in case of Ola Electric, the up move has been very sharp because the stock was offered at, I think, 75, 76. After that, it went all the way to 140, 150, and now it is around 125 or so. I think in some of these stocks where these are, you can say, relatively, you can call the new technology companies, I think we are going to see a lot of volatility, at least in the near to medium term, till the time there is some sort of stability which comes in terms of operations as well as in case of financials. So I think as far as IPOs are concerned, I think it is time to be very cautious given the way the valuations are there. Plus, particularly in case of the companies which are technology-led, I think one needs to be very clear because the initial volatility can lead one to take, you can say, exposures at higher levels.
Expecting anything big from Reliance AGM today? Anything specific which markets are looking forward to?
Yeah, Nikunj, as I earlier also stated that I would be more keenly watching out for what they state on the, you can say, green hydrogen, new energy and all these green initiatives. Because if you look at the stock price today from the past few, I think couple of quarters, it's more or less like range bound. So whatever happens in case of the geo platforms or retail, that is already more or less baked into what the analyst expectations are and what the street targets are. And any incremental alpha in Reliance is going to come from these new energy, green hydrogen, solar, and all these kinds of initiatives. So that would something which I would be more keenly watching out for, because that is not something which people are today factoring into the SOTP valuations of companies. So if there is a concrete plan on that, then I think that could be positive for Reliance.
Thanks so much, Amnish, for joining in. Good to have you on.
If you like this video, then like, share and subscribe to ET Now.